There's a $10 trillion ticking time bomb sitting inside the financial system, and almost nobody is talking about it. Unless you've been here on this channel, and we've covered it lots of times, it's the reverse carry trade. And when it blows up, we're going to need something that doesn't exist in the current banking system. And that's where I think XRP might step in. This is about financial infrastructure, systemic risk, and why Japan, XRP, and the digital yen might be the only thing standing between global liquidity and a global crisis. Okay, so if you haven't been here before, we're going to go ahead and go over what the reverse carry trade is. For decades, global institutions have been borrowing cheap yen at close to zero interest rates to buy higher yielding assets in dollars, euros, and other emerging markets. So they would borrow that yen from the Bank of Japan, swap it through FX to whatever currency they wanted, and then go put that to work, earning much higher returns. And then they owe 0% to the Bank of Japan. It's free money. And that is what the reverse carry trade is. It's close to $10 trillion in exposure. When rates shift or FX volatility spikes, these positions are going to unwind fast. Investors will have to sell off their foreign assets and rush to buy back the yen. So they have to sell in the stock market or gold or wherever else they're positioned, swap back to whatever the currency it was in whatever jurisdiction they purchased it, and then go back through FX to yen before they can repay those notes. So this slams the FX market, the bond market, and credit globally, all at once. So what's going to happen? It's not good, right? It's a tidal wave of capital surging back to Japan. Dollars, euros, and all of the other currencies that people are selling off to swap for the yen crash, and the yen will explode higher. Demand for the yen will be excessive. So US treasuries, they're going to be dumped. Yields are going to spike, and bond markets will break. Global liquidity will evaporate, just like in March of 2020, but much, much worse. The Bank of Japan will have two options. They can either let the yen appreciate and kill their exports, or they can defend the bond market and risk hyperinflation because they're going to have to print a bunch of yen in order to buy those bonds. It's a lose-lose situation, unless they have a third option sitting in the background. So this is where I think XRP might be the missing piece. So instead of dumping foreign assets directly into the yen, flows could be routed from, let's say, US dollars through XRP and then into the Japanese yen. XRP would serve as a liquidity buffer